Okay, peeps, welcome back. So today we're going to be talking about, can YieldMax ETF share prices recover? And we're going to take a look at the most bullish days in each ETF. Let's get it. So as you guys can see, I have the charts pulled up here for Tesla and Tesla. I actually have to switch this one for Tesla. Still have it on the day trading time frame. Sorry about that. So we're going to switch Tesla over here to the daily time frame. So we have both of these on the daily. Now, I did want to caveat this. We may or may not be able to cover every single ETF by YieldMax, and the reason being is because they have a lot of them. So we're going to try to do the best we can here. Okay. So let's take a look at the overall charts to see when the most bullish days were for the YieldMax ETFs. We'll start with Tesla. As you guys can see here, on this day, we had a pretty bullish day. Tesla itself was up about 5%. As you guys can see on the daily time frame here, Tesla went up roughly about $20 that day. So we'll take a look at that. So Tesla also went up that day roughly about 5%. So it appears that the YieldMax ETFs at first glance pretty much mirror the exact price of the upside. Now they say that the price upside potential is capped, but in some cases it doesn't appear to be so. In some cases it does. So it kind of really depends on the overall price action of the underlying stock. But we'll just take the most recent months here, and we'll take a look at the most bullish days to see just how much potential upside these things have. So you got July 24th here. You're taking a look at maybe as much as a 5.3% up day. And again, Tesla had a pretty green day on that day, as you guys can see here. Roughly about the same amount, about 5.5%. Another really big green day that we had was right here, as you guys can see on this candle, which is the June 22nd date. We had roughly about looks like about a 6% gain on that day. And we're looking at roughly about also 6%, maybe even a little bit more on Tesla. So that covers the Tesla ETF. We'll now go ahead and go on to the next one. So the next one we're going to look at is Coney. Now, Coney doesn't really have a lot of price action under its belt yet compared to Tesla, but that's okay. We're going to look at it regardless. Type in Coinbase Global here, get the Coinbase chart pulled up. As you guys can see, this thing really, if you were in Coinbase and you made this move, hey man, congrats to you, dude. You literally just doubled your money. This thing was crazy. So, as you guys can see here, we don't have a lot of trading action. It's kind of just chopping sideways, but some of the most bullish days that we saw we saw a really big one right here. So roughly about an 8% move, and this was on, looks like August 29th. So if we go over to the left here, you guys can see there was a huge green candle on August 29th for Coinbase. Now, in this particular instance, the Coinbase price action, the Coinbase stock did actually outperform Coney. So that's a bit interesting. But then again, you have to understand crypto is extremely volatile. So it's probably going to move a lot more than something like Tesla. So on this day, we had about a 6.1% move. I believe that was on the 7th of September. If we go over here to this day, which is, well, it's roughly about the 7th of September. So you get about a 9% move. So once again, it looks like Coinbase is slightly outperforming Coney here. So here's another big one. You guys can see we bounced pretty much right off support. There's probably a lot of investors or traders looking at that zone thinking they were going to buy there, which makes sense because it was previous supports. So October 6th, we had about a 6.5% rally on Coney. And again, on October 6th on Coinbase, had about an 8.84%. So Coinbase did actually outperform here. So we'll go on to the next one, which is Apple. And we're going to go to Apple. So Apple has been kind of a surprise, to be honest. Wasn't really expecting Apple to have this much of a sell-off. As you guys can see on the daily chart on Apple, this thing has been pretty steady uptrending the whole year until as of recently. But if you look at the two charts next to each other, you can see it's pretty much mirroring exactly what Apple's doing. Apple is. So there's actually not really a whole lot of really big green days here, as you guys can see. So yeah, Apple's not really one of those stocks, or Apple, I should say, is not really one of those ETFs that's going to have like huge moves to the upside and downside. It's kind of going to be more slow and steady in either direction because Apple's just too well established of a company. It's just too big at this point to have really huge volatile swings like that. I mean, it's a $2-3 trillion company, something like that. So this would probably be more for Apple in terms of the long-term growth. Assuming that Apple continues to grow, I would say that, assuming those things are true, this would be one of those more slow grinders to the upside that could give some pretty good price appreciation. So OARC is going to be our next one. Got to actually find the ARC ETF here. It's in here somewhere. Give me a second, fellas. I got like a zillion different tickers in here. So, all right, so here's the ARC ETF and OARK. As you guys can see, this thing's been pretty steadily on a downtrend, but as we've showed you guys before, both of these charts, and I'm actually going to point this out for you guys, both of these charts are actually in what's known as a falling wedge pattern. This is a technical pattern. That means the probability of it breaking to the upside is much higher than the probability of it breaking to the downside. Now, what is the upside target for a falling wedge? Well, it's basically the top of the wedge. So for ARC, it would be 5118, and for OARK, the top of the wedge here would be roughly about the starting price or the opening price of the fund, which was 2120, or I guess it wouldn't be the opening price, but it would be like the all-time high. So that's your technical pattern there. But I would say that we probably haven't really seen a whole lot of bullish days here. You're roughly about a 3% move here, so it's not huge. We go back in time. You guys can see that it did have a couple bigger moves back here. So you get this one was roughly about 5%. That was on February 15th. And keep in mind, February 15th was actually when the markets were looking a little bit more bullish. So oops, I did not mean to move that line. Okay, so February 15th is really hard to see. So I guess this right here is February 15th. So you're getting about an equal move on ARKK. Now if we go to the next one, we're over to AMZ and Amazon. Reason why AMZ was so bullish as of lately, and I'm going to show you guys here on the charts, is because I believe Amazon just had earnings and their earnings actually smashed expectations. So yeah, as you guys can see, Amazon beat earnings by 60, or yeah, their earnings by 60% and the revenue by 1.12%. So it's pretty large. We can actually take a look at from the gap to the gap up here. You guys can see the maximum move was about 8%. That's pretty big for a company as big as Amazon. And the close was about 6%. So AMZ is relatively new. We're not going to have a lot of price action on this as of right now. But you guys can see that we had a couple bullish days here. So we had this one where it was up 3%. And this one was basically had your gap up. We just showed you guys that here. So roughly about 7%. So it's about equal to what Amazon did. FB, which is another one that we just took a look at. As soon as I can find Meta, here we go. So you guys can see Meta had a very similar reaction, had a massive beat on earnings, as you guys can see on both fronts. So that was really good. And we had a huge gap up, and basically the price wicked down, which indicates rejection or the buyers are basically buying up the price at the bottom, and we had this huge gap up to basically close this gap here, and then we closed up about 6% on the day. We take a look at FB. As you guys can see here, it pretty much almost mirrored the move exactly. And looks like we have one really other big day here. So about 5% on this day. This was October 10th. So I gotta find that candle real quick. So this was October 10th. This would actually be October 6th. So yeah, it only went up about 2% on that day on October 10th, but for whatever reason, oh wait a minute, hold on. I think I'm looking at this wrong. My bad. So that's October 6th. So yeah, I was looking at this way wrong. So 5% on October 6th. And then this move here, we have also about 5%. So that's pretty much equal in terms of the upside movements. So actually, yeah, I don't think I'm going to be able to have time to go over like every single bullish day that we have here. But here's what I'm going to do for you guys. So just to make sure that we can get this out to you, we're going to go ahead and take a look at the overall trends to kind of gauge exactly how to expect the performance of the YieldMax ETFs going forward. So if we zoom out here, you can see that Google was going up, and while Google was going up, GUI was kind of just chopping sideways. I would say in the immediate short term, that's probably the best case scenario for some of these YieldMax ETFs is just to be sitting at highs and chopping sideways. That would be ideal with massive income payouts. But as you guys can see, on the Google earnings, they did beat, but I'm assuming that the earnings call was kind of bearish. Maybe the forward guidance wasn't exactly what investors wanted to hear, so they sold off. This is the unfortunate nature of being in the market sometimes, is sometimes the markets just don't do what you want, and they just end up going down instead of going up, unless you're a bear, of course. If you're a bear, you love this kind of stuff, but we bulls are not exactly thrilled about the idea of the market selling off for a long period of time. So as you guys can see here, pretty much chopping sideways on MSFT, and something very similar happened on the Microsoft YieldMax ETF. And we'll go ahead and go to the next one, which is DSO. And we'll type in Disney here. So Disney's kind of been getting plummeted, or pounded, I should say, in terms of price. You guys have to understand, when they did at some point cut their dividend, Disney did. And when they did, a lot of investors probably sold out of the stock because they're like, well, it's not going to pay me a dividend anymore. Why would I invest? In my opinion, just my opinion, of course, that was a huge mistake. They probably shouldn't have done that. They probably should have kept the dividend, but who am I? I'm just some guy on YouTube, right? So as you guys can see here, the price of Disney has kind of more or less just been chopping sideways in this range. And you guys can see on the YieldMax ETFs, it's done something very similar. We go over to NVIDIA, pull up the NVDA chart. You guys can see that NVIDIA's had a really huge rally during 2023. It's been kind of insane, actually. I mean, anybody that bought down here, they made out like absolute bandits on the way up. So basically, during the time frame that the NVIDIA ETF came out, you guys can see with it had this huge gap up on earnings. So the price of NVIDIA started out bullish, and then as NVIDIA was going up and chopping sideways, NVIDIA kind of did the same thing with it. And then as NVIDIA was selling off, NVIDIA sold off. So we're actually still looking pretty good on the charts of NVIDIA from a technical perspective. So Enfley also had a major bounce off of, I believe it was the Netflix earnings. Yeah, so this time frame of the year, the fourth quarter of the year, is usually when there's major earnings. That's part of the reason. Another part of the reason, besides seasonality, that October through December is typically pretty bullish, is because a lot of the big companies in the S&P 500, especially the tech stocks, are reporting during this time of year. But at the same time, people are going out and buying for holidays, and companies are selling, truckloads of goods and services and stuff for Christmas gifts and whatnot. But anyways, as you can see on Netflix, they did beat on that day. There was a massive gap up, and the price of Enfley ended up following. So the technicals basically said that as Netflix was chopping sideways, so did Enfley, and then we had this huge dump, and Enfley dumped, and then earnings happened, and then kapow, straight to the upside. So we'll take a look at one more. So we're going to take a look at Zomo, because this is one we haven't really covered a lot on this channel, and I'm sure there's a lot of oil bulls out there, maybe even some oil bulls that are watching this channel that are probably wondering, like, hey, what is oil doing? What is ExxonMobil doing? Because we actually also used to hold ExxonMobil in our accounts for the dividend growth investing in the past. So we'll go ahead and cover this one too. So as you guys can see, Zomo basically has been chopping sideways with the price of XOM. XOM kind of had like a pretty large drop here. As you guys can see, the price followed, and XOMO has just more or less been following the technicals pretty much almost to a T on this case. No major earnings. Oh, wait, I take that back. I lied. So they did actually just have earnings. I didn't even realize this. And I'm literally watching the earnings calendar, and I somehow failed to notice this. Probably because I was watching big tech. I mean, a lot of investors typically watch big tech over companies like this. But as you guys can see, they had a slight miss. So, I mean, that is unfortunate. But, like we've said on this channel before, we expect the prices of oil to come down over the long term, and gas prices in America to come down as well. So what's the thesis here on these YieldMax ETFs and whether the price can go up over time? Well, basically, what it appears to look like is that what we would like to see is a long-term. I'll try to get a good example of this. So we'll use NVIDIA as our example here, so you guys can actually see what I'm talking about instead of just hearing me talk here. So basically, what we would really want to see is for the YieldMax ETFs to go up for a long period of time and really appreciate in price. We want to see something like this, where the stock is basically heading up for an extended period of time. Okay. We're talking like 6 months, 12 months, 24 months, 36 months, with maybe like some slight pullbacks along the way, nothing big, like maybe 2 to 4 weeks, maybe 6 weeks of pullbacks, and then start ripping higher to the moon, like is normal with traditional technical and economic bull markets. But as you guys can see, the price of NVIDIA absolutely ripped from 1960 here all the way up to 26 bucks a share on earnings, while NVIDIA ripped from 300 to 420 per share. So we kind of really want to see the price of the underlying stocks on these ETFs just go up steadily over time with slight pullbacks along the way for dip buying opportunities. That's more or less what we want to see. We don't want to see this sideways chop and maybe even like some sell-offs. But as we told you guys before, the Fed is still, and I hate to keep beating the drum on this, but the Fed is still raising rates, okay, until they come out and say, or I should say holding rates until they come out and say we're either going to raise or we're going to cut. Nothing changes. Until they come out and say they're going to cut, we still consider the Fed to be raising and or holding rates. And until they end up, I would say, getting at least halfway to 2/3 of the way through their cutting cycle and or into what's known as quantitative easing, where they're printing money and they're buying assets, adding assets to their balance sheet, so on, so on. Until we get to that point, we might still continue to see some of this chop, unfortunately, and maybe even some downside. It's hard to say at this point, but we really don't know. There's a FOMC meeting coming up in a few days, which we're going to be covering. But yeah, anyways, this is our video on can the YieldMax ETF share price recover, the most bullish days on some of these funds, and what to expect in order to see the share prices go up. So hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.